Ladies and gentlemen, good day, and welcome to the Waaree Renewables Technologies Ltd Q3 FY25 earnings conference call hosted by Orient Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Nidhi Vijayvargiya. Thank you, and over to you, ma'am.
Thank you, Alric. Good evening, ladies and gentlemen. I welcome you all to the earnings conference call of Waaree Renewables Technologies Ltd to discuss the Q3 and 9 months FY25 business performance. Today on the call, we have from management Mr. Dilip Panjwani, CFO, Mr. Manmohan Sharma, VP Finance and Account, and Mr. Rohit Waaree, General Manager, Investor Relations. Before we proceed with this call, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risks and uncertainties. For more details, kindly refer to the investor presentation and other filings that can be found on the company's website. Without further ado, I would like to hand over the call to the management for their opening remarks, and then we will open the floor for Q&A. Thank you, and over to you, Dilip sir.
Thank you, Nidhi. Good evening, everyone. I would like to extend a warm welcome to all of you for joining the earnings conference call of Waaree Renewables Technologies Ltd, where we will be discussing our business performance for the third quarter and 9 months of the financial year 2025. I trust that you have had the opportunity to review our financial results and investor presentation, which has been made available on the stock exchange and our company's website. I also want to express my sincere gratitude to all those who have dedicated their time to join this call and who continue to support our journey. We have along with us Mr. Manmohan Sharma, VP Finance and Accounts, Mr. Rohit Waaree, General Manager, Investor Relations, and other key members of our management team. The current quarter has been remarkable in many aspects for renewable energy sector. The unwavering commitment of government to propel energy transition is witnessing new heights. This quarter has witnessed remarkable growth in India's solar sector, showcasing the impressive strides made by the country's renewable energy in 2024. India's total installed power capacity now stands at 482 gigawatt. The total renewable energy capacity has now reached at 209.44 gigawatt, with the solar sector accounting almost half of it at 97.86 gigawatt. These achievements have set new records and further strengthened India's position as global leader in clean energy. The country added 24.5 gigawatt of new solar capacity in 2024, a significant surge led by utility-scale solar projects, which contributed 18.5 gigawatt, almost 3 times the capacity added in 2023. Rajasthan, Gujarat, and Tamil Nadu played a pivotal role, together contributing 71% of these utility-scale additions. Additionally, rooftop solar saw 53% increase, with 4.59 gigawatt added, supported by initiatives like PM Surya Ghar Muft Bijli Yojana. Off-grid solar contributed by an additional 1.48 gigawatt, experiencing a remarkable 197% growth, reaching at 4.23 gigawatt in December 2024. The overall growth reflects India's strong commitment to achieving its clean energy targets and is aligned with the country's broader climate goals. In total, renewable energy capacity grew 15.84% year-on-year, with solar and wind energy leading the charge. This positions India as global leader in renewable energy and reinforces our optimism for the sector's continued expansion. Turning now to our financial performance for the third quarter and first 9 months of financial year 2025, we are pleased to report that our unexecuted order book stood at 3.4 gigawatt peak in the first 9 months of financial year 2025. We successfully executed EPC orders totaling 319 megawatt peak for 9 months FY25. Our revenue grew by 85.87%, amounting to 1,121.17 crores. Our EBITDA for 9 months FY 2025 stood at 184.57 crores, representing a year-on-year growth of 39.95% compared to 131.89 crores in the same period last year. Similarly, PAT for 9 months FY 2025 has reached 135.16 crores, reflecting year-on-year growth of 43.94%. For third quarter FY 2025, our revenues stood at 360.35 crores compared to 324.19 crores in the same period last year. EBITDA for the third quarter FY 25 stood at 71.92 crores and our PAT stood at 53.48 crores. We are extremely pleased with the progress we have made and remain confident in our ability to continue this strong growth trajectory in the upcoming quarters. Our commitment to sustainable and clean energy solutions remain unwavering, and we are excited about opportunities that lie ahead. Thank you once again for your continued support. We now open the floor for any questions you may have.
Thank you. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohan from Elverse Capital. Please go ahead.
Good evening, sir.
Good evening.
Yeah. Just wanted to understand what has been our per megawatt revenue for this quarter and 9 months as a whole. And looks like the margin have come under pressure YOY this quarter. So your comments on that.
Normally we operate under 1 to 1.1 crore per megawatt, and that's in line. We have given our billing data also in our notes to accounts. Roughly around 319 megawatt of business that we have done for a turnover of about 360 crores. Of course, 360 crores includes our business for O&M and IPP also. However, the turnover for EPC was 353 crores.
Okay, and any comments on the margin?
Yeah, sure. We have already guided since 3 odd quarters, we have been guiding that our margins must be in the range of 15%. However, we are pleased that they have turned out to be 19.96% this quarter. And for 9 months ended, they are nearer to our internal calculations, which we keep saying that we should be under 15%. So 16.50% is for 9 months. So this goes with our commentary in last few quarters that we have delivered to our stakeholders in most of our communications. So that's where our margins stand at.
What are the timelines that you look at to complete the pending order book? You have been guiding that around 20 to 18 months, but a fair sense as we are entering the last quarter, the pending order book that you aim to complete within.
So Rohan, all EPC companies will continue to guide according to their, and it will always be a moving goalpost because new order keeps entering. So what we have communicated, 9 to 15 months is the correct version. Of if you have to complete and take no new orders, then what the timeline I have indicated is the correct timeline. But in EPC companies, there is always a trajectory of new orders coming in, and that keeps extending the time.
Just this quarter, if we have to look at it's around 300 odd megawatts. So if we just analyze it, it comes to around 1.2 gigawatts. And accordingly, if we have to see around 3 gigawatts of order, and hence my question was on that line.
Well, we can't extrapolate based on that because these are whole solar generating systems, first of all. And second thing is, I have already completed 1 gigawatt in first 9 months itself. So I can't extrapolate my 319 megawatts of business that I have delivered in this quarter. If you look at my past quarter, we had delivered 500 megawatt of business in the last quarter, a little less than 500 megawatt maybe, but that's what we delivered. 488 was a precise number that we delivered in our previous quarter. So, 3.4 gigawatt is what represents for 15 months because one of the biggest orders that we have won in this quarter for 2 gigawatt has come in now in the month of November itself, for which we are starting the work now.
Okay. Thank you.
Thank you. A reminder to all participants, you may press star and one to ask a question. The next question is from the line of Deepesh Agrawal, ICICI Prudential AMC. Please go ahead.
Yeah, good evening, sir. Just a couple of questions. So in the previous call, you had highlighted that we are seeing increased competition in the space. So has that competition resulted in any loss of pricing power that we had?
It's very difficult to say if we have lost pricing power. If you look at our growth trajectory, we have been growing. Our order book position is growing. Our 9 months turnover, if you see, because we keep guiding that you should look at EPC companies for 12 months. That is also up by 87%. But I want to admit that there is competitive intensity. It is good for productivity of companies. But as such for pricing power, we don't undertake projects which are not profitable to us.
And secondly, you also highlighted that you will be looking to foray into data centers. So is this like a niche idea or something under exploration, or what is the status of this?
So as a group, we had been working on this idea because of synergies. Right now, the board has approved amending the object clause because we do want to foray into data center business. There are synergies. Data centers, you build EPC solar generating projects. Now we will build data centers also under an EPC model. And also, coupled with data centers have a lot of energy consumption. Roughly, some estimate the energy consumption in data center varies between 50 to 75%, depending upon how the data center is used, whether it is for e-commerce or whether it is for corporates. So there are definitely synergies, and we have been studying this, and that's why we decided that it's time now for us to diversify into data center EPC as well.
All right. My last question was, how are we looking in terms of our cash positions, and would we be looking forward to raise any debt for further execution of projects?
I lost your last line. What did you say? Can you repeat that?
So I wanted to know our current cash position, and are we considering any plans to raise debt in order to fund our future projects?
So cash position is quite comfortable. We are about 220 crores of cash. Our debt position is currently only one loan that is running is around 28 crores outstanding right now for us. We are not looking to raise any funded debt, but we are always scouting for non-fund-based limits because we need to give bank guarantees, etc., to our customers. So that's what we keep shopping for. But shopping for debt is not on the cards as of now, unless we do some capex, which we may like to monetize in some form.
That is all I had. Thank you so much.
Thank you. The next question is from the line of Shivani from Monarch Network Capital. Please go ahead.
Hi, thank you for the opportunity. My first question is a follow-on question, of the previous candidate. It is around the non-fund limit that you mentioned. Could you throw some light on the current non-fund limit available and how much you are able to churn it?
So we have right now limits of almost 1,400 crores. What I would also like to additionally highlight is that there is now insurance companies who have also entered this segment who are providing equivalent products as banks. We have shopped with them around until now 300 crores of insurance products also, which are equivalent of banking products. But our banking fund limits are right now at 1,400 odd crores with usage of around 75 to 80%.
Okay. Sure. Could you repeat the point on the insurance limits?
I have already said they compete with banking products in non-fund based limit space. What else? If you have any specific question, I can address it.
Sure. No, that was helpful. Secondly, on, in general, EPC company, they have a stronger H2 compared to H1, and I also see the margin improving in this quarter. So is it because we have already recognized the cost in the previous quarter and hence we are seeing the improved margins?
There are two different.
About it going forward.
Shivani, these are two different things. One is that we are not permitted to do pre-book cost and not pre-book revenues because that's against the accounting principles. So cost will match with revenues as a principle. The second half, as far as margins is concerned, I've already addressed it that, we better surprise ourselves rather than, be not cautious. So we have always maintained that we should be under 15%. We are better than 15% is good for us.
Sure. Sure. And so how do we think about the coming order books, like future order books? Are we seeing more traction from the, PSUs or private players? Just some understanding on how are we, how to think about it directionally.
So, directionally, government business is going to be strong going forward, which we have always guided. But historically, if you witness Waaree Renewables book, it is more finding favor with the utility scale IPP players which are on the private side. And even the current order book is geared towards that. Our pipeline is also geared more towards larger private players as of now.
Okay, sure. Thank you. That was helpful. I'll be in the queue if there's any follow-on questions.
Thank you. The next question is from the line of Ishwar Arumugam from iThought PMS. Please go ahead.
Hi, thank you for the opportunity. Just like to follow up on the last analyst who asked the question. So, I wanted to understand the main difference or how you go about bidding in a PSU order and private order. Is there any difference? Because PSU generally bid L1, L2. So private player also, do you bid the same or do you get the order through your contacts?
So, private players largely are bilateral, and as you rightly said, PSUs are more L1, L2. So that's the basic difference.
Okay, so would you be going for more PSU orders in the future, or would you like to continue with?
We are already addressing that market segment very aggressively, but our bias is still towards utility scale IPP players on account of, quick order wins and those aspects.
Okay. And would you estimate that would there be any difference between the margins in PSU order and public sector order?
No, both are almost similar. Some projects you will find.
I understand PSU would be a little bit more competitive, right? So would there be any difference in margins? We're going for more PSU orders.
PSUs are not competitive as such. The competitive intensity in bidding for PSU projects is higher. Bilateral people normally go for understanding, who can serve them best, who brings on board better technology and all those aspects, in every project there is some bit of nuances toward design, etc., which bilaterally, utility scale players try to address, and that's why, you find little bit of margin bias as well as order winning bias towards utility scale providers better.
Okay. Yes. That's all the questions. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from Anushka Vora from Vimana Capital. Please go ahead.
Yes, hi. Thank you for taking my question. My first question is more on a macro level. So how do you see the demand shaping up in the sector, and are you seeing any delays in project execution from the client side, and just a macro view of that?
In the initial commentary itself, when we started, there is a set of numbers that I have read out. And if you look at a year back when we were talking, there was a lot of skepticism whether the government will deliver this kind of projects, etc. From the start of the year itself, when there was an 18 gigawatt tender issuance in one quarter itself, to 24.5 gigawatt of solar installations, they come a long way. When I started my journey in Waaree, India was at in the month of August, India was at 70 gigawatt of solar. Today, the installed capacity in solar is 97 gigawatt. So the country definitely is cruising nicely towards its goal of 500 gigawatt ultimately, of renewable energy. So at a macro level, until now, we are witnessing commitment of the government, a lot of capital coming in this sector, and a lot of things happening on the storage side that we are witnessing. On the client side, projection delays, I can't comment something specific because we are always on time and we have been delivering whatever is our commitment with customers. But from the customer side, we have not experienced any significant delays as such. So it's difficult to put anything on that side. But macro level, I already addressed. You have any other point on that, Anushka? Happy to address.
No, this was it. And even for just how is your FY25 shaping up? Any guidance that you can give for top line?
So, as a policy, we don't give guidance, but, we have already delivered about 11-21 crores of revenues. We expect next quarter, this quarter, to be of January to March, we should be doing 500 to 600 megawatt of execution. That's what we expect.
Okay, thank you. And just one last question. How are you seeing the margin shaping up?
I've already addressed that in my third question or I think second question. We should be in the range of 15% is what I have mentioned.
Okay. Thank you.
Thank you. The next question is from the line of Naman Jain from Kotak Institutional Equities. Please go ahead.
Hello, am I audible?
Yes, sir.
So, a couple of questions. While we did impressive execution in Q2 FY25, there have been some, execution delay. So, if you can just put as to why we sort of didn't do as much in Q3, despite it being a relatively more suitable season for EPC. And secondly, margin-wise, we have always outperformed the industry. And you have historically guided a 15-odd%, but we have consistently delivered. So when we break it down, the significant difference comes from gross margin, which is, so if you can, try to explain as to why we have such, as in first, higher margins, and second, why is there such variability across quarters?
So, Naman, I don't think we have ever read out that we have delayed any projects. We are starting point. From a volume perspective, this quarter we invoiced little less, but that's in consensus with customers as well, based on how they perceive execution, how we perceive execution. More than perceive, how we contract out execution as well, not only perception. So that explains, my invoicing for the quarter and how we have performed. Given that, I also say that, the next quarter we should see somewhere around 500 to 600 megawatt of invoicing, and that's again in line with our discussions with customers.
Okay.
Also, we cannot lose sight of the biggest order that I said, in terms of size, complexity. It's India's largest order, 2 gigawatt for any company, It's a balance of system order, and it's a very big order for us. So we have been consistently performing, and both on the order secured front and on what we call invoicing front, we have performed as to what we are supposed to perform with our customers. Okay. However, coming back to margin, what you analyzed is correct at gross margin level, but I addressed it in an indirect method to some other question where I said that we don't undertake contracts which are not profitable to us. So maybe, when you are analyzing, if the other companies where you are analyzing, if they have orders, some orders which are profitable, some orders which they have undertaken only for revenue sake, maybe, I'm not saying somebody has done that. That could skew margins against them, which we normally try to avoid, and we consistently follow our risk policy of not taking projects which are not accretive in margins to us. So that probably explains why we did. But we continue to maintain, based on our contracts with customers, that we should be at 15% level.
Understood. Thank you. And the large order, very important thing for you and a huge win for the Indian solar sector in general to get a 2 gigawatt order. What is the expected execution timeline, if you can share, for this order?
Roughly about 8 or 9 months.
Okay, 8 or 9 months. Got it. And one last question. Going forward, I understand that we aim for a certain margin in each of our EPC projects, right? So is it safe to assume that we'll try to maintain the 15% margin in the medium term at the very least?
Certainly in the medium term, we will try to maintain that 15% margin level.
Got it. Thank you.
Thank you. The next question is from the line of Samarth Khandelwal from ICICI Securities. Please go ahead.
Hello. Firstly, sir, congratulations on a very good set of numbers and impressive margins. Secondly, so my question is, it is a two-part question. One is related to your existing business. I wanted to understand what's the difference between basically only a BOS order versus a complete EPC order in the solar power project. And sir, the second question is with respect to data center. I just wanted to understand that until now you have not, and how are you going to, are there any pre-qualification basis which, because a data center is a very sensitive kind of setup, and it is a completely different versus setting up open space solar panels. How are we going to address that?
So, so coming back to your first question of balance of system versus EPC order. So there are two types of orders in industry. One is called turnkey solutions, in which entire responsibility of setting up solar
Now being recorded.
is upon us. And in case of balance of system, only certain scope is given to us. Like they may exclude land, they may exclude modules, while they may include, inverters, they may include cables. And installation and commissioning is certainly part of balance of system. So there's a basic difference depending upon scope. So if there is a requirement of 4 crores per megawatt, balance of system may account for only 1.5 crore, 1.2 crore, depending upon scope. Sometimes it goes down even to 70 to 80 lakh rupees per megawatt also. So there's a basic difference. What was your second question, if you can repeat?
The second question is regarding data centers. You mentioned that you would be for exploring data center EPC orders as a new business segment. So, like, how would you be? What size of orders would you be aiming for? With who would be the players? Would it be the existing ones, STT, Tata Communications, or which type of data centers, hyperscale or edge? Like, these questions have been thought of, or
no,
if you could just share some light.
As I told you, we have had put our minds, before we went to the board, and those are the questions that will be addressed as we go into the market and solicit the business. But I can assure you one thing that, like we addressed all segments of renewable segment, power segment, RTC, hybrid. In data center, we will not exclude ourselves from a particular set of type of data center, Once you bid, you will bid for all types of business, because you will build those capabilities, before bidding. And definitely there will be prerequisites, one will not get business without prerequisites. So we will be going with all the prerequisites that are required to set up a data center.
Right. Thank you, sir.
Thank you. The next question is from the line of Isha Shah from Nirzar Enterprise. Please go ahead.
Good afternoon, sir. I have a couple of questions. So my first question is, sir, if you could talk about the opportunity size from the government PSU business, P&I, rooftop and IPP in gigawatt terms. And following to this question is, what is our EPC and O&M opportunity in this?
To differentiate between government and private is quite difficult. However, almost like 60 to 70% of the business comes from utility scale IPC. India is going for 40 to 50 gigawatt of renewable energy per annum. So you can say, about 30% odd percent, 30-35% comes from government sites, which is like NTPC, SECI, and other PSUs have also started now entering like IOC, BPCL tenders. Those are the segments of the market that comes to us. And what was your second question?
So what is our EPC and O&M opportunity in this?
Yeah. So EPC opportunity is what I told you is entirely our opportunity. However, if you look at our presentation, we have already said that we are now sitting on 24 gigawatt pipeline. So that's the opportunity we are sitting as of today. But the entire market of 40 gigawatt that in the solar side that comes up along with battery and these our opportunity right now. As regards O&M, we are sitting on right now 587 megawatt of O&M, and we have certain projects going live in March, which will get converted into O&M for us about 2x to 3x size of our current base from April onwards. So that's our O&M. However, the entire 92 gigawatt, somebody is doing O&M, so that's an opportunity for O&M as well.
Okay. Sir, if I may ask other question, then sir, if you see now there are a lot of companies that are raising money and there are many new entrants. So what's the competition intensity over here?
So competition intensity, as market grows, competition keeps growing, which I said in my previous communication also. Sometimes it is good for industry because you get the best productivity out. But as Waaree, we are very cautious on our margins and our profitability. We don't get into unnecessary competitive intensity to just bring business on board.
Okay. And so are there any technology challenges that we are facing or any kind of shortage of the components other than module that we are facing?
Not in solar renewable energy as of now.
Not in this. Okay. And so my last question would be, are we planning to enter into solar parks?
See, we are opportunistic in renewable energy in every sphere. Tomorrow, if there is an opportunity and we find it profitable to set up a solar park, we will definitely do that. Solar park essentially requires, land connectivity where a government sanctions it, So once we have that, in fact, we have 2 subsidiaries we have set up for same opportunity. Tomorrow, if we have an opportunity, we will use those subsidiaries to obtain connectivity and land for the same, which we already communicated in our previous communication also.
Okay. So, is the land available with us, or that also will be something, if there's an opportunity, then we would look for it?
No, there is no land bank as of now. We have gotten this, that tomorrow should there be an opportunity, we should be prepared to seize the opportunity.
Okay, understood. And so what are our export opportunities?
See, the market is quite big in Middle East and US. But we are right now focused because the domestic opportunity is also equally big.
Okay. So we are focusing more on the domestic opportunity.
Right.
And also in the PPT, we also mentioned about floating solar, So what would be the cost of that?
See, we can't individually present what is the cost of that's something, floating solar, because that's something proprietary and confidential to us.
Okay.
And we reflect that as a showcasing our capability that we can undertake all sorts of complex size and variation in EPC space.
Okay. But sir, if we talk about margins over here, but also knowing that Waaree only enters into projects that are like that gives them a good margin, so we can assume that the margins will be in line with other kind of category of solar or EPC, whatever we are doing.
I've already addressed the same thing. If you were there on the call in the beginning, at 15% level is what we consistently maintain in line with our contracts with customers.
All right. No, so I just wanted to understand if it's solar or floating solar, then it would be on the similar lines. So I just wanted to understand that.
Yeah, floating solar also will be on the similar lines. See, margin is a blended one. It's a combination of all types of projects, whether it's a turnkey project, whether it's a floating project, whether it's a rooftop project. It's a blended one.
Okay. Okay, understood. And so you also mentioned about green hydrogen. So are we planning to get into that, or is what is that about?
So Waaree Group already has a presence in hydrogen. They have been awarded 350 megawatt of electrolyzer. But as and when use case opportunity comes up, which is likely to come up, we will definitely be bidding for EPC part of the hydrogen play as well.
EPC part of hydrogen. Okay, green hydrogen.
Yeah.
Okay. So just to understand, what would be the EPC part over here for green hydrogen? Because since there would be electrolyzer and everything. Just to understand.
That's a very technical question. What we mean commercially is that in a green hydrogen, you have to produce hydrogen by green methods, which is either solar or some renewable energy, or maybe RTC along with wind, etc. What we will be undertaking is that setting up their plant in entirety, which can ultimately produce hydrogen through renewable energy sources, is what we will be undertaking. And that's how we are in discussion with our clients. Wherever there is a use case, large-scale deployment of hydrogen is required.
Okay, understood, sir. Thank you so much for answering all my questions. That's it from my side.
Thank you, Isha.
Thank you. The next question is from the line of Namril Shah from ValueQuest. Please go ahead.
So I have two questions. One of them is with respect to the order that was received from Jindal Renewables of 2 gigawatt. Typically, the realizations are 1 to 1.1 crore per megawatt, as you highlighted. However, looking at the Jindal Renewables order, the average realization comes to around 60 lakhs per megawatt. Is it that the scope of the order is lesser vis-a-vis other BOS orders? That is my first question. The other question is, in terms of the unexecuted order book, can you throw some light on where are we in terms of the stage of completion for at least the top 3 orders, namely Greenco, Neepco, and Acciona Energy? Thank you.
Second question will be, difficult to speak in terms of confidentiality perspective, but I can give you a generic view. But let me address the first question first. As far as the question on per megawatt per lakh rupees is concerned, I have already addressed that the projects and turnkey projects versus balance of system can range from 70 odd lakhs to 4 crores. So it's the blended approach that we take, and our blended scope is still at 1 to 1.1 crore for the unexecuted order book portion included for Jindal. So that's where we stand at. And there are always more nuances to projects, where a scope is later increased by the customer also. That has happened with us in some of the customers. But you are reading maybe right, we may arrive at an accurate value, but I want to address again that the project scope can differ from 70 odd lakhs to 1.1 crore as well. As far as the second is concerned, on the top 3, we are on track is what I can mention. And very much with all the customers. I can't comment on individual customer level in view of confidentiality.
Just one follow-up question. In terms of the 1 gigawatt of execution that we have done in 9 months of FY25, have we finished any of those orders, or all of the orders are in execution phase? And one more question on the Jindal order. What is being excluded out of the scope of the order vis-a-vis the other BOS orders?
So, as far as completion of projects is concerned, we have completed quite a bit of projects which were running in the past. So, some of the projects have got completed. In the 1 gigawatt included, that we have completed in the 9 months this current year. As far as Jindal exclusions are concerned, again, there is client confidentiality, but predominantly it doesn't include module and land.
Sure. Thank you so much.
Thank you. The next question is from the line of Harshil Sethia from Renaissance Investments. Please go ahead.
Hi. All my questions have been answered. Thank you.
Thank you. The next question is from the line of Shan Patel from CD Integrated Services Limited. Please go ahead.
Hello. Good evening, first of all. I have two questions. My first question is that the revenue this quarter, Waaree did a revenue of 360 crores, taking the 3-quarter total to around 1,000 crores, and with a very marginal revenue growth this quarter. However, the employee costs remain high at 7 crore, similar to last quarter when the revenue was 500 crore. So does this imply that projects for 200 crore are pending completion and recognition? And if so, can we expect the next quarter revenue to be around 700 crores to meet the guidance of 1,300 to 1,500 crore for the year?
So, I can take the later part of the question very easily. I've already said that, we should be aiming for 500 to 600 megawatt of business in this quarter, in this fourth quarter, So whatever that revenue translates based on that volume of the work, we could be around about, again, if you take 1 crore, then it should be around 500 to 600 crores. However, employee cost will not function that, 200 crores was short or something like that. When you are putting people on site, whether you complete the project or not, you have to pay for the people's cost out there, That's what the platform business is, and that leverage of people's cost in platform works both ways, However, traditionally it has worked in our favor in terms of higher revenues. So maybe, we will make up in the next quarter, but it's definitely not a function of that, we have missed out some 200 crores or something.
Okay, perfect. And apart from that, so Waaree has an unexecuted order book of 0.42 gigawatts approx. What is the maximum capacity it can execute in a year, like 2 gigawatts, 3 gigawatts? Or is there any specific capacity constraint? And additionally, for the next year, how much of their order book can realistically be completed?
So, it depends always on your manpower. In the current circumstances, we should be able to deliver between 3 to 3.5 gigawatt of business annually.
Okay, 3.5 annually. Okay.
Yeah. 3 to 3.5 around we should be able to execute.
Okay. Got it. And this year, the last quarter, you gave a guidance of 1.5 to 2 gigawatts, like 1,500 to 2,000 crores. That is in like the half two. So I think this quarter it is very difficult to complete that, right?
It appears so based on that numbers, but traditionally we don't give guidance. What we are giving is what is the volume of work we are internally, putting a goal post of completion.
Got it. Correct. Okay. That is from my side.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. On behalf of Orient Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.